Hey wealth builders, so yesterday I released a bit of a video with an overview of what I think's going on in the world right now. What I wanted to do is just release a follow-up because when Trump is posting on True Social on a Friday that there's going to be exemptions for the big tech companies basically and the electric companies, that there's going to be exemptions on the tariffs from China, which were almost already all there already, then you know that this is a really big problem and signal in the market. And so there is essentially a capitulation based upon the reaction in the market, but most people are trying to figure out what Trump's doing and whether he's winning or losing. My answer is, if you watched my last video, you'll know that he's winning, but winning in the destruction and the capital outflow of the US market, because you'll understand when you look at his backers and when you follow the money in global capital, that those financial institutions have already repositioned themselves based upon the fact that this was a mission and Trump was installed because the previous path was World War III, and this path is a controlled demolition in an extended time frame of the US market based upon breaking the world up into global blocks. And I talked about how it coincided with the geopolitical war negotiations. You can watch that video anyway. What I wanted to do in this video is cover what you should be looking for next week. While I can share the long-term trends, but if you're in the trenches and you're looking at the market and you're looking for signals, almost everybody focuses on the wrong thing. People will talk about the stock market as the key performance indicator. It's actually relative value that you need to look at, and you need to look at the markets that actually matter. And the markets that actually matter is the bond market, the currency market, and the commodity market. Whereas the stock market, it doesn't really matter if it goes, if the wild volatility, unless you're looking at it in terms of relative strength. And that's the message I want to give you. So in simple terms, I just want to give you a few things that you should be looking at. The first thing is you should be looking at a basket of currencies priced in dollars. So the most important currencies priced in dollars, and you're looking at the price of dollar relative to the other key indicators, and there are baskets out there, and you should be looking at that. There was a major correction in the dollar, and it was mainly relative to the capital outflows, which went to Switzerland, the Swiss franc, which is a very bad sign, and Japan, the Japanese won, which is a very bad sign, because Japan is essentially the central bank of hedge funds. It's where you go to borrow at 0% or now 0.5%. You hedge out the currency risk and you use it to speculate on the markets. This is where much of the over leverage in the system, and it is essentially America's best ally. And with the exception of Cayman Island, which is where all the government debt is held on behalf of the BlackRocks and the key fund managers, Japan is the largest country, and so capital was outflowing from America and they were selling treasuries. How do I know that? Because you got to look at the bond market. Now, the most important markets is not treasuries, which is the short-term loans, it's the longer-term bonds. A bond is essentially a product where you lend money to the US government, and it has a yield, and a yield is the price or the interest at which it is willing to pay in order to borrow money from anyone that wants to buy those bonds. And they will borrow them for 10 years and 30 years. You have to look at those. Now, when yields are rising, it is because the price of those bonds, I don't want to go too deeply into it because it's not too important, the price of those bonds crash, which means that others are selling those bonds. There was a massive selling pressure of those bonds at the same time when you combine it with currencies. So if you can tell that there is selling pressure because the yield on the 10-year and 30-year bonds are rising, and that's the important thing you need to know. They don't want it to rise. If they are rising, then the cost for America to refinance its debt is increasing. and that is a bad thing for what the goals are at the moment. And then if the rates are rising on the bonds, the 10-year and 30-year bonds, at the same time as the dollar weakening relative to the Swiss franc and the Japanese yen, then that is a very, very important indicator of capital outflow and the mission of the tariff wars, which I believe is to outflow capital from the US and send it to regional blocks in a controlled demolition over time, but re-onboard the manufacturing base of robotics and AI in order to replace human jobs over a long term, which is why the exemption to the tariffs was given for the large tech companies and the technocracy. They're going to be building these robotics, AI, and warfare as well, based upon these semiconductor chips and various components, which America is 100% dependent upon China and can't stop those imports. And so the impact of this is that America can't stop those imports for years to come, and those components, which China has built a massive ecosystem by investing in regions like Africa, Latin America, Central America, and partnering with BRICS and the Global South, has already built a massive network of rare earths and, based upon rebuilding economies through the Belt and Road Initiative, which is the opposite of the IMF. The IMF has been destroying countries, blowing them up, regime changing them, forcing them into Western trade with tied loans, based upon using the hedge funds at the Bank of Japan in order to crash the currencies and destroy the wealth of savers in those countries through the IMF. And so you've got two completely opposite models with the IMF and the Belt and Road Initiative in terms of this trade war, which is why it only makes sense if it were a controlled demolition. Now, the other thing to look at is the stock market. So the stock market is mainly dominated in America by the big 7, Max 7 tech companies, which I think will do well because they're a global play, and that's what America is being built into, a technocracy. And so, there will be boom areas within America, but they are massively overvalued. And so a lot of that price and profit that the companies like Warren Buffett and Berkshire Hathaway have already made, because they sold and they knew this was going to happen, way before it happened, they have already got out of those stocks, which means that there is a valuation correction that is needed. But the long-term future of those companies, I personally believe, will be fine. But you've got to get, these valuations. So, what is one of the most concerning things? It is the stock market and its general performance measured by the S&P relative to the price of gold and the price of Bitcoin. At the moment, the central banks have all been leading up to this, accumulating gold, knowing that there's going to be a capital flight, or they know that the trends that are going to be happening. And BlackRock and the large multinational financial institutions all got their clients into Bitcoin through the Bitcoin ETF. Now, gold has been outperforming Bitcoin because central banks have significantly more pulling power than large global multinational financial institutions. And so what you're looking at is the price of gold and Bitcoin relative to the US stock market and relative to other stock markets. And so if you have a scenario where gold is rising for an extended period of time and Bitcoin is rising for an extended period of time, short term means nothing, and the stocks are contracting, then that signals a trivial outflow from US stocks to Bitcoin and gold ETFs, because BlackRock made that trivial, and the other companies, the global finance companies, made that trivial for people to do within their 401ks and their retirement accounts. Now, the other thing that you must watch is the price of oil, because it affects the price of gas which is a vital resource in this whole, electric vehicle, AI, robotics ecosystem that America and China are both building to compete with each other on, where there is no trade war, because China's essentially already won, because they have the manufacturing base, and America will take 5 to 10 years to try and rebuild the manufacturing base, but it will still be purchasing goods from China, even if it's via proxy countries that will create an arbitrage. This is exactly what happened during the sanctions. Russia and Iran, they still flow all of their oil around the world because they have partnerships through the BRICS networks, and China is dependent upon them as a partner. And so therefore the sanctions actually made the Russian economy stronger, in terms of it went from a 22% debt to GDP to a 14% debt to GDP. And Iran, the most sanctioned country in the world, has already built all of its flows and is now engaging in a trade deal negotiation. So global capital knows that America, the creators of these wars via proxy, is going to be at some point releasing sanctions and opening up the markets in the trade deal that they're putting together, now that global capital has decided that they would like to put much more of their capital from America into the Middle East and other regions that are going to be supported by BRICS, because wars end not when from humanitarian reasons, is when profit ends. And there was a calculation, I believe, between the global financial institutions that World War III was going to be less profitable than breaking the world up into regions and redeploying capital around the world and having multiple places to invest into. And so that is why we are experiencing everything, and I covered that in detail in the last video. But the one to watch is oil. That's why, if for any reason Israel, which is not aligned with America at the moment, tries to continue the Zionist vision, which is based upon extremism and weaponization of the faith of Judaism, if for any reason they manage to get US into a war with Iran, which I believe is not going to happen, because the neocon model of the profits of the military industrial complex are not are losing essentially to global financial institutions that want to invest all around the world. And global financial institutions are the shareholders in the military industrial complex. But there is an internal struggle around the old model of, America's neocon Zionist model of profiting from forever wars, and the lobby money is still pushed in those directions. But I think the lobby money towards regional blocks is greater than the lobby money of the military at the moment, and there's somewhat of a crossover. And so if for any reason that power of Zionist control of American Congress and Senate prevails into some kind of false flag operation, that means that Israel persuades America to put boots on the ground in Yemen, and then a false flag happens which escalates it to Iran, which I put as very low likelihood at this stage. It was very likely under Biden, but I don't think global capital wants that to happen anymore, because it's not profitable. But if for any reason then that happens, then you will get a massive price in the spike you'll get a massive spike in the price of oil. And if you have a spike in the price of oil, that will again accelerate the wealth of those oil producers, which is America, Russia, OPEC plus, and then the flows will act accordingly. But what is actually happening is a crash in the price of oil to create massive disruption and massive capital outflows, which affects the price of gas, which is the input commodity for electricity, artificial intelligence, Bitcoin mining, and various other things. So the price of oil going down destroys the drill baby drill mission in America. So while he won his campaign based upon drill baby drill, the profits of oil and energy producers within America, they cannot produce at the same cost as OPEC plus in the Middle East. And so while it will impact their profits in OPEC plus, it will be worse for the American economy the lower the price goes. Now, Trump is in a double bind, or Besant and the Trump administration is in a double bind, because they're trying to offset some of this inflation. Now, inflation and deflation is a very complex one to figure out right now, because you've got deflationary forces, with the tariffs being inherently leading to increase in prices to factor in the import tariffs from China that will happen within America. And then also you have to factor in the deflationary impact of a global financial crisis, which inevitably, not necessarily a global financial crisis, a global recession that could then lead to a global financial crisis. Now, the reason we don't have a global financial crisis is because Trump had to capitulate this week and create a pump and dump, which made his insiders very wealthy. If you saw him bragging about it in the White House, with Charles Schwab, about how he made $1 billion from Trump doing his tweets or his posts on True Social. But that is the reason, because the 10-year and 30-year borrowing rates for the US government are going up. That is a big problem. And so he's trying to offset that with with some of the deflationary force of oil and gas, but then that has an impact in GDP. So everything has a knock-on effect, and then that increases the likelihoods. But the reason we didn't get a global financial crisis, because this increase in rates impacts the commercial market, the real estate market, the auto loans market, the student loans market, and America is massively over-leveraged because it is built upon a debt-based Ponzi scheme created by the Federal Reserve for its shareholders, the banks that own the Federal Reserve. And so it is massively over-leveraged, whereas China has $3 trillion of gold, dollar reserves, and also 22.5 tons of gold, which is commonly reported because it does it through different types of companies as well. And so, but China also only exports about 15% of its exports go to America. So it would hit it, but it doesn't have, despite Western media telling you about the debt problem within China, which is real, but China has a state banking system, and it doesn't have a political process that distracts it, where the policy changes based upon left and right, Republican and Democrat changes, and the votes that will be coming up. So China can handle it because it's got a state banking system and it has a political continuity process, as well, whatever happens in the global recession. But America, it can trigger a credit crisis and a global financial crisis, which would then push the Fed to potentially pump the Ponzi scheme. But here's the point. The stability of the US is no longer a stable, safe place for global capital, because the uncertainty is unbearable for investors relative to what it's all been, which is why you had a massive overvaluation of the stock market for the last decade, because global finance was preparing for its exit strategy, and redeploying capital into the companies that are going to remain, which is anyone involved in the robotics ecosystem. So that's the indicators to look out. In summary, the 10-year Treasury yield, the 30-year Treasury yield, if it goes up, that's a problem. If Bitcoin and gold go up relative to US stocks, that's a problem. And if there is more capital outflow and an increase in relative value from the US dollar to the Swiss franc and the Japanese yen, and a general decrease in the value of the dollar, which had its largest increase this week for a long time, then these are signals that the video that I recorded yesterday, that type of scenario is happening, and expect it to coincide with the eventual escalations to de-escalate many of the wars because the new world order has been set, and those negotiations are all happening right now, because World War III was not going to be as profitable as splitting the world up into blocks. Follow the money, don't listen to what they say, and I'll see you in a future video.